Hello everyone, my name is Kevin Carlson. I'm a mortgage broker here in Canada. Thank you so much for joining me on my channel today to learn a little bit more about mortgage financing. Today I'm going to be talking about mortgages for those with a little bit of challenging credit situations, or more negatively referred to as bad credit. First of all, I want to clarify bad credit. I am not talking about those that have a credit card and they might have been a few days or a week late on making their minimum payment a few times over the last 5 years. I'm not talking about those folks at all. Even if you've had, say, a collection from a traffic offense or perhaps a cell phone contract go to a collection agency, but you paid the collection off right away, well, I'm not talking about those people either. Those are not considered challenging or bad credit situations. If you've had loans and credit cards in your name and they're open and active, and you've had a couple of other little credit bumps like that, those things really aren't going to drag your credit score down by very much at all. What I am referring to as bad credit is those with habitual late payments ongoing for years, missing payments being late, going over limit on lines of credit and credit cards, having multiple collections that have gone unpaid, having a bankruptcy, consumer proposal, or gone through credit counseling. These are the people that I'm talking about today. I'm going to break down mortgages in two different categories when it comes to bad credit. First of all, we'll talk about those for purchase of a home, and then I'm going to be going over mortgages for a refinance, where you already own the home and you're looking to take out a mortgage refinance of a house in order to address perhaps this bad debt. If it's mortgage refinancing that you're mostly interested in, I'll set a bookmark in the comments below for you to be able to jump ahead to that point in the video. Or just take the search bar on your video player and just move it up to about this timestamp. So first we'll go over home purchases, also two different categories. The first would be for those with less than 20% down payment. Mortgages for the purchase of a home with less than 20% down payment, you still have to have fairly stable credit in order to be approved for a mortgage like that. The minimum beacon score or credit score, they basically mean the same thing, in order for you to get a mortgage for the purchase of a home with less than 20% down is 600. Now that 600 is basically the bottom bar. You're going to have maybe a little bit more than that. If your credit score is at 600, there's probably a good reason for it, and it's a good idea for us to take a look at it and just see exactly why it's at 600, which is considered low. If your credit score is over 600 and you've had perhaps a collection or something fairly minor and you've either paid it or you're about to, then you should still be approved for a mortgage at fully discounted broker rates. There shouldn't be too much concern over that sort of a minor thing. If in addition to a collection on your credit report over and above, say, a 610 or 620 credit score, and you've missed quite a few payments over the last few years, well, you might have a little bit of difficulty and you might need to have a cosigner or up your down payment by a little bit from the bare 5% to maybe 10 or maybe even 15% down payment. The cosigner has to be somebody with good, strong credit and good, strong income and provable income in order to be considered as a cosigner. Quite a few of the lenders that I work with will allow a cosigner to easily be removed after 1 year and perhaps even 2 after the credit has stabilized. If you're looking to purchase a home and your credit score is under 600, well, you need something more than just a cosigner. If your credit score is under 600, more than likely your name won't be allowed on the mortgage if you have less than 20% down payment. So ideally, what we'll do is whoever would stand in as the cosigner would actually take out the mortgage in their own name, and then once a couple of years go by and your credit is stabilized, then you can assume or take over the mortgage from that person later on. Another way to address a purchase mortgage where your credit score might be a bit low is increasing your down payment. Getting your down payment past the 20% level opens up the list of lenders that I'm able to use by quite a bit. Any mortgage broker in Canada will have access to quite a few lenders that will assist a client in a situation with a credit score below 600 with 20 or 25% down payment in a purchase mortgage. Now, let me qualify when it comes to those with bankruptcy and that sort of thing. If you're currently in bankruptcy or in a consumer proposal or credit counseling of some sort, you are basically in credit purgatory. applying for any sort of new credit while you're in one of these things is certainly not advisable and probably a waste of time anyway, so you wouldn't even be approved. Now, home purchase with 20% down or more, I'm sure you can figure out that that's a little bit of an easier process. Your credit does not have to be quite as good as if your down payment was less, because you're not dealing with one of the mortgage insurers like CIBC or Genworth. Their rules and guidelines are pretty strict. That bare 600 beacon score is what they stick to. So even if you're at 580 or 585 or something like that, they're going to want to see the credit score come up or add a cosigner or significantly increase your credit score. Keep in mind that the lower your credit score, the more the down payment you might have to have. If your credit score is significantly lower, closer to 500, the down payment of 20% might not do it. You may need to come up with 30 or even 40% down payment in order to get a mortgage just in your own name without a cosigner. And when you're dealing with the lenders that are willing to take on those higher risks, comes higher rates and higher costs for you, unfortunately. The lenders that we work with in these higher risk scenarios for those with difficult credit situations normally only lend in major cities. They're not looking to put mortgages onto houses in small towns or on acreages. So it's in your best interest to keep your credit nice and clean and keep your score as high as possible, especially when you're about to apply for a mortgage. If you're looking to purchase a home, it doesn't matter how much down payment you have. If you've got outstanding collections or judgments against you, those accounts are more than likely going to have to be paid off in full prior to getting the mortgage. If you have significant difficulty with lots of collections and any other issues that might happen, you may need to pay those and then let your credit rehabilitate for a little while before you be considered for a mortgage later. It could take 6 months or a year, sometimes 2 years in order for your credit score to rebound after that sort of difficulty. Now let's talk about mortgage refinancing. If you already own the home and your credit situation is difficult and you're looking for a mortgage, more than likely the lender that you have now is maybe not going to renew the mortgage, or you're looking to leverage your equity in order to address some financial concerns. Getting a mortgage through the big 5 banks here in Canada when your credit has already gone off the rails can be a bit of a challenge. The bar for getting credit in the big banks has always been fairly stringent, and so that's why most people turn to mortgage brokers in situations like that. Of the dozen or so lenders that I routinely work with, about half of them actually have mortgage products specifically designed and geared for those with difficult credit situations. So with mortgage refinancing, just like with purchasing, the worse your credit is or the lower your credit score, the less lenders there are that are likely to help, and the higher the rates and the fees that might be involved in a mortgage like that. There are 4 key things that I look at as a mortgage broker that helps me determine which of these lenders will be best suited to help my client that's going to give them the very best rates possible. The first is their credit score and the history with that credit. Number 2 is loan to value, or the mortgage amount versus the value of the house. Now this is typically done for mortgage refinancing. So just for easy numbers, if you have a house that's worth $100,000 and you need a mortgage of $50,000, then the loan to value is 50%. In difficult credit situations when it comes to refinancing, the lower the loan to value, the easier it is to get a mortgage. Third is the nature and amount of the household income. Number 4 is the location and type of the property. So is it a condo or house? Is it in a major center, or is it just outside? To a lesser extent would be the net worth when it comes to savings, investments, RSPs, and other assets that make up their net worth. Think of these 4 items as pillars that hold up a roof. So if one of the pillars is weakened, as long as the other 3 are nice and stable, then the roof won't fall in. But if 2 or more of them have begun to crumble, then the roof will fall in. So for example, if your credit score for whatever reason has fallen well below 600 to say 550, and you're looking for a refinance mortgage of 80% of your home's current value, even if that house is located in a major center, that mortgage will more than likely not be approved without some sort of a strong cosigner. So let's take that same client again that has a credit score of 550, and they're looking for a mortgage that's 50% of the house's current value. Now, if that house is located in a remote small town of less than 100 people, once again, that mortgage will probably not be approved without a strong cosigner. Now, on the other side of the coin, if the house is located in a major center like Toronto, Calgary, Vancouver, that mortgage will almost definitely be approved without a cosigner. When it comes to equity financing, it is location, location, location. I've been able to help hundreds of clients over the years in pretty terrible financial situations, and some even keep them from losing their homes. Here's just a few scenarios of the types of things that I'm able to help clients with. If a client has missed enough mortgage payments that it has triggered a foreclosure, well, they could be losing their home. There has been occasions when I've been able to find a mortgage lender that will take the risk to be able to help them out and pay out the foreclosure and save them from losing their house. Help clients avoid bankruptcy due to job loss or illness. Help those folks that are in a consumer proposal pay those out. Consumer proposals can sometimes go on for years, and the sooner that people get those paid out, the sooner that they can move on with their credit. Helping clients address debts with the Canada revenue agencies when it comes to income tax and other tax debts. Helping clients with these tricky mortgage scenarios is some of the most rewarding work that I do. But let me be clear, these high risk and higher interest rate mortgages are not a long-term solution. These are not meant to be 5-year closed terms that the client is stuck with. Most of the time, these clients are getting a 1 to a 2-year term on this mortgage. And then I help and coach the client to get their credit situation back on track so that after the term is completed with that lender, we move them on to a bank with a much lower interest rate to save them money going forward. Thanks for joining me on my channel today to learn a little bit more about mortgages when it comes to bad credit and difficult credit situations. If you have concerns about your own credit and you want to take charge and fix your credit for yourself, you can certainly do that. One of my previous videos is on how to increase your credit score. I will link to it in the description below. Go take a look at it. If you have questions or comments about mortgages or difficult credit situations, I invite you to comment below or contact me through my website. Thank you so much for your time and have a great day.